All right, guys, good morning. Welcome to Anomaly Sequence Day 19. Today, I thought I'd walk you guys through the first position that I took on the TradeFlow competition, yielding me roughly 30% return in this competition. If you're viewing this recording around, let's say, the start of October, there is still chance to join the competition. More on that later. $50,000 cash prize on the line. But let's walk you through this case study. I'm going to showcase a little bit of just overall technical understanding, and this is going to be the first time that we touch base upon ETF execution timeframes in Anomaly sequence, where I'll also be walking you through very, very aggressive mannerisms, which I did yesterday. So during that competition, and later in the video, I'll showcase you guys a little bit more about the competition on its own. Overall, it was a very, very nice play, a lot better than all of my September. I'd love to go over a couple of my September positions maybe tomorrow or the day afterwards. But overall, you can see that October really lined up in a very, very nice manner. The first thing that we can look at is the fact that, hey, we talked about this a little bit earlier in Anomaly sequence, the fact that we're taking out previous buy-side liquidity levels, areas that are obviously considered to be expensive, and this allows us to then think of a potential retracement in price, right? If we take out two significant buy-side liquidity levels, which have been holding price for a very, very long time, then obviously we will be looking into a potential move lower to target pretty much this entire consolidation that occurred before. Remember, one key aspect that we also talked about is this was pretty much the last bullish array that we created, an overlap with a BPR and a bullish imbalance, right? From here, we were really looking at one of two things, okay? Here we were looking at very easy plays for price to come back into this array, trade into buy-side liquidity, right? We're creating daily arrays, whether it's that shift zone that we see here, but you can see that there's just a little bit more overlap than literal barcode candles with no imbalances, with a classic shakeout that you can see here. So test your fractality one more time. We are very much in a consolidation here, and you can see that this is that deviation lower, deviation higher, and that price shakes out liquidity. Then the first things that we see is that we see price then sweep liquidity lower, right? Run on that sell side liquidity relative equal lows that we have here. Price then creates a bullish array, and then we finally start creating something, right? On the move downwards, we have a very heavy bearish imbalance candle, to the downside, leaving an imbalance very small, which then gets absorbed and then going back into a bullish candle, leaving a bullish imbalance, which then forms that BPR sweet spot right here, which then caused us to have very easy trades to the upside. I didn't manage to profit as much as I wanted to from this very clear draw on liquidity, but many people managed to really make their September really well by doing so. For me, the timings were always off. It was either out of session or just I wasn't in the right headspace. For me, September was just rough. It has officially been closed as a red month for me. First red month of the entire year. If I can keep it at one red month of the 12, I will be extremely happy. What we notice kind of more closer to price, obviously, is that we then have this array, right? And one of two things. Notice how we react around this array. We officially have a candle close below the distal line of this bullish imbalance. So we're transacting below. This also is amplified by the fact that we have distribution wicks, right? So we don't have a fresh injection here, so a wick that would go lower like this, right? We don't have this occurring, which would then signify that there would be a new injection of bullish buy-side buying participants. We leave behind an imbalance like this. We also leave one here, lower. But general rule of liquidity, if we have a void like this, right, just very like aggressive move to the downside, a displacement in that sense, leaving behind two inefficiencies. The bigger one is going to be called the inefficiency, which is here. The smaller one is just your imbalance. So more chance of fair valuation, if anything, right? Not fair value gaps, but fair valuation, aka that fulfillment, will be found in the bigger gap of that liquidity void. That liquidity void was pretty much something that you could trade into. Not my cup of tea, but that was obviously something where we were looking at a potential reaction to occur yesterday. So let's go straight into flow. Pretty much this is all the details that you need. It overlaps with a shift zone as well, valid shift zone. No body closes right into in this area of that shift zone, right, as such. So overall quite nice, but I believe midpoint imbalance showcases it a lot more efficiently in that sense. Other than that, nothing too interesting. You can see here injection wicks, no follow through, which is great sign that we weren't going to do something along these lines. Obviously we were wary of that. You know, you got to understand that, hey, such bullish drive, the first thing that you want to look at is this high going to be isolated or not? And now it is isolated pretty much, not fully, but it's pretty much there, right? So let's go into it. Let's go into flow. Let's go into H4, H1, and you will see a little bit more. You can see how these candles that we talked about last time, showcasing your fractality, will adjust, which is great. I'm going to remove that shift zone, not my most important just yet. I'm going to expand this one. I'm going to make sure that you guys kind of are up to date with everything that we see. So the daily imbalance, right, obviously comes from this low to pretty much this high. We're going to remove this and we're going to just amplify it and adjust it to what H4 gives us. Okay, so we got one of two things, which is really sick to see. Again, same concept, price is fractal. We have a liquidity void from here to here, which leaves behind two inefficiencies. Again, what do you notice? The bigger inefficiency right here, they're nearly equal size, but the bigger inefficiency, let's just check that out, right? If we do a little price range and we go magnet to magnet, this one is 20.1 pips, and this one is 20.2 pips. So the bigger inefficiency here is the one where you can be more focused upon. In this case, it's 0.1 pip difference, so really not the most spectacular difference there is. But you can see how one of two things occur here, right? We have a midpoint in an inefficiency and an imbalance, which holds really, really nicely. And then from there, pretty much we have this beautiful isolation, which means that price tapped one more time in the higher level. It's not as if there's anything magical happening here, unfortunately. But this was great to see, right? So there are a couple things that you do here, right? You look at bullish imbalances. You look at stuff like this where you're like, hey, we'll get to this one later in a second. But you look at this order flow here and you're like, okay, price is respecting this order flow, but we're not breaking anything yet, right? We're respecting bullish imbalances. We're also at the same time respecting bearish imbalances, and we're building up all this low resistance liquidity right here with failed actual follow-throughs, right? We're not really breaking anything to the upside, leaving behind imbalances to the upside, let's say above, let's say this area right here. So you're really understanding that you got to be super intact with pretty much your narrative and your order flow. So that's one thing. Then let's go into pretty much what we see here, right? This is where we see another imbalance to the downside, another little imbalance to the downside as well. But overall, right, this is what I wanted to talk about, which is the fact that we have these distribution wicks right here. Distribution wicks, body close below, even on H4, so your first fractal time frame of flow, right? Flow state, H4, H1, everything under the daily up until your execution time frame. You can see that that's the case. And then we see price distribute higher, no reactions off of this imbalance, no reactions off of this imbalance, and our eyes were fixated here. Price started to fluctuate a little bit. Let's go into H1, and that's where the real magic happens. That's where it really started to get fun. and you can kind of see exactly how you can adapt your imbalances one more time, right, making them even more accurate, right? So that would be this one, right? You can see that this one then happens to be here, right? H1 imbalance as such, and then you can see that this area, just like that, right, from this low to that high, becomes our H1 imbalance as well. And now you can see that we've pretty much defined and refined the entire void from daily into H4 into H1, and you can see that it gets a lot more accurate, which is great. We start off the day pretty much here, Wednesday. We've got a couple of signs here, lots of questions of why is this low from Tuesday, not the real low, right? This becomes your internal liquidity point. This becomes previous daily low. So that kind of became a very, very clear target. Other than that, don't get me wrong, I wanted to target this and I wanted to target this as well, which is hopefully something that I can get into today to go lower, right? But let's walk you through this H1, right? What do we notice? We have H1 higher time frame arrays that we reacted off of, right? And very clear sell side liquidity pools, right? Areas that we can see if there's some sort of intent to go lower, which there was, that we can then target those moves. There was even, let's say, a double up yesterday that some people caught, which was really cool. So let's go into ETF. So you go into your ETF with the ideology that, hey, we've swept out major levels of buy side liquidity. We're tapping into these open pockets. We're tapping into these areas where price can distribute that bullish injection and can also then inject sell side, right? And a way of confirming that is looking at wicks. A little bit too advanced, so don't worry about that because you need to jump fractals here, which you don't want to do, but you can see stuff that's pretty cool here. Either way, we have a higher time frame array. Your bias is short on the daily. You're understanding that there's a retracement, so you've got two green lights. You've got feel state, which is everything above daily, including daily, being a green light, and then you've got flow state, H4, as I said, H4, H1, everything below daily up until your ETF, also giving you a green light of, hey, we're into POI, we can do this, we can now look for shorts. And this is the short, this was the move. I'm going to showcase you guys exactly how I pretty much pyramided into this. So you've got your H1 arrays, right? So you understand that, hey, you've got this pocket to the downside where you potentially want price to go into, but you got previous daily low right here, nope, right here, which is where you want price to go into, and you've got Asia range low as well. One of two things that you could be doing here. Either way, what do you notice? Here, price just no pullback to New York midnight, right? Just this awkward, let's say, heavy movement to the upside. Then you can see price accurately reacting one more time from that H1 imbalance, still respecting bullish order flow, right? So you draw your bullish order flow, the last one that got respected, boom, like that. You notice that then translates into this BPR that we have here as well. But then you start pivoting around the idea that, hey, there were guys that took this. I wanted to market execute there on M5. M5 shift was completely valid. But again, M15 was even more valid. Acting this as your shift, right? This becomes your real market shift right here. As such, this becomes your market shift, right? This becomes your M5 shift as well, and then it was just a matter of fact of waiting for pullbacks and letting price come in. So we go into a little bit lower time frames before it gets a little bit chaotic, right? And I gotta kind of watch market open in a bit as well. We're doing this early, but I want to make sure that I also have enough time for the competition today. So let's go into M5. You can see M5. I just want to make sure that the position here is also visible, but I seem to just doesn't want to showcase itself. Let's try to do that one more time. But what you can see pretty much when we go to M5 like this, very, very beautiful. honestly, this is what you're looking for. These are the things that you need to be waiting for. All of September, I try to chase setups like this, missing all the key elements from H1, H4 daily. You've got so much higher time frame overlap, and it was beautiful to see. Again, you can refine all your stuff one more time, getting BPRs here, getting BPRs here. Regardless, doesn't matter a lot. This is where stuff like OTE comes from, body to body OTE, right? And you can see that if we just fixate on the 61 and the 78, you will notice that this sweet spot right here, if we drag that out, notice my cursor here, dragging that out, that becomes pretty much your OTE spot as well. Very clean setup, not really a lot of rocket science when it comes to profit taking, but I pyramided my way into this, which allowed me to do quite heavy percentages on gain, 30% gain on the leaderboard as well. So I'm very, very content about that. So yeah, you can see pretty much how we did this. You can see pretty much just where the position came from. Buy side, no follow through from this, no follow through from this, building up that liquidity, and then eventually tapping in. And then you can see imbalances being formed, and imbalances being formed, all the way up until the bottom, using DXY as cross-reference. And then pretty much what you're able to do, if you understand a little bit how you pyramid positions, is that you can stack these positions on the way down, moving them pretty much risk-free to break even, and then entering along these lines, just market executing smaller sides to really amplify your profits. Overall, you got to understand, I did come in heavy with my stop loss. I'm risking roughly around 5% per position. Because it's a competition, guys, it's not my actual private trading account. It is private capital. I did put $1,000 up front for this, and now we're sitting at $1,305, which is very, very nice. And now we're just sitting on our hands, waiting for the next setup like this to really shoot and play aggressive with. So I hope that you guys learned a little bit of just building up towards this position, what my execution looks like on this position, right? My TP was very, very viable. I took partials here as well, and then I stacked into this as well, going lower, and then I carried it on towards this area on, let's say, my normal accounts, right? Getting a big piece of the pie, and then it came back to break even after I wanted to. We obviously had that news that came in, which was here, tapping me out break even on other positions, which is unfortunate, but overall very, very nice. After a major partial profit taking roughly anywhere between 60 and 80% of the position here. Then I wanted this lower as well. So I hope that makes sense. This was ADP unemployment. Not a big fan of that, but in an NFP week, you usually have that being the catalyst. So let me showcase you guys a little bit more about the competition next, and I'll see you guys on the flip side.